Welcome to Bizworld. I'm Nurin Razmyn. The government has set up the Energy Exchange or ENEGEM for trading off green electricity supply to Singapore. The Energy Transition and Water Transformation Ministry, PETRA, is now inviting bids for a 100 megawatt pilot project using existing infrastructure between the two neighbours. The ministry said the transactions through the platform will be based on the latest guide for cross-border electricity sales issued by the Energy Commission. Bidders can register their interest through PETRA or the single buyer unit. The ministry is confident that the implementation through the ENEGEM platform will allow Malaysia to strengthen the cross-border electrical supply framework. It added that the initiative will also open up opportunities for development and wider cooperation in the cross-border renewable energy bidding. Bank Negara stands ready to deploy the tools at its disposal to ensure that the Malaysian financial markets remain orderly and continue to function efficiently in view of the current geopolitical conflict. The central bank will also manage any risk arising from heightened financial market volatility. In a statement, the central bank said it will ensure sufficient liquidity and the orderly functioning of the foreign exchange market. This is supported by the ongoing initiatives with government-linked companies, corporates and exporters to further bring inflows and liquidity into the foreign exchange market. Yesterday, Prime Minister Datuk Seri Anwar Ibrahim said the government is closely monitoring the developments in the Middle East conflict and the financial market situation, including its potential impact on Malaysia. He also assured that the government will act accordingly to strengthen the country's economic and financial stability. The ripple effects of higher oil prices on Asia-Pacific APAC economies are expected to be felt if the current development of the Middle East tensions is not diffused soon. According to Moody's analytics, this could lead to inflation and economic challenges, particularly for countries heavily reliant on oil imports. It said the challenges include increased inflation due to higher energy and fuel costs, as well as the rise of production and transportation expenses. This in turn affects prices across various sectors, including food and everyday items. In the meantime, economies such as Indonesia, Singapore and Malaysia are also facing added pressure with the rising food and energy prices. Bursa Malaysia ended lower today, weighed down by the geopolitical tensions in the Middle East. At 5 p.m., the FBM KLCI lost 8.51 points to 1,542.53. Losers outpaced gainers with 993 against 230 counters, while 374 counters traded unchanged. According to Bank Mamalat, investors were cautious as they observed the prevailing conditions in the Middle East, especially on the possible retaliation by Zionist forces and its allies against Iran. Foreign investors net sold 11% more shares in a three-day trading week, shortened by Hari Raya celebrations last week in its seventh consecutive week of selling. According to MIDF research, foreign investors net sold 373 million ringgit equities last week. The top sectors net bought by foreign investors were property, transportation and logistics and construction. While sectors they were net selling were financial services, utilities as well as consumer products and services. Local institutions, meanwhile, continued their trend of buying domestic equities for the seventh consecutive week, totaling 430 million ringgit, while local retailers continued as net sellers for the fifth consecutive week, amounting to 57 million ringgit. And that's all the time we have for Bizworld. I'm Nurin Razmyn. Keep tuning in to TV3.